Hello everyone, welcome back to my Chanel Crypto Informed another video. I hope you're all doing well and having an amazing day. Without further ado, let's jump right into today's topic. We have some news from the cryptocurrency space that I want to share with you. If you've been following the channel for a while, this will make sense to you. It's important for everyone to really grasp this information. I was reading comments and browsing Twitter when I saw someone mention, "Dude, we get it." So, I'll try to stop phrasing it that way. Instead, I want you to continue absorbing the information I provide daily to get a broader understanding of what's happening in this market. This recent news didn't gain as much attention as I expected. I don't understand why some news stories, like the one we had a few weeks ago about a t-shirt or something similar, become super popular. However, significant news about Bitcoin staying power or interest from other markets or wealthy individuals often doesn't get as much attention as I'd anticipate. For instance, Edmond de Rothschild, Swiss SA, a family-owned banking giant from the prominent European banking dynasty, holds $4.2 million in Bitcoin exchange-traded funds. This shouldn't be surprising, but in case you didn't know, yes, the Rothschilds do have some allocation in Bitcoin. It would have been odd to assume they didn't have any investment in it over the years. Years with like 7 S's. One of the most frustrating discussions I've had on this channel is about how BlackRock has been buying Bitcoin for a long time. But if it's not explicitly reported in the news or confirmed by someone from the family, people just don't believe it. They assume these wealthy individuals aren't aware of the news and information we have. All rich people know each other, especially the super rich. They share information about new trends. When you have hundreds of millions, billions, or even trillions of dollars, you spread your investments across many areas to avoid putting all your eggs in one basket, especially if you have 1 trillion eggs. This is similar to the rumors from years ago. I'm not going to name countries, but various places around the world were rumored to be buying Bitcoin. In 2018 or 2019, when news broke that BlackRock was already in Bitcoin, no one seemed to care until they filed for a Bitcoin ETF at the end of 2023. The same goes for the Rothschild family. If you think they're just now getting into Bitcoin, you're terribly mistaken. They've been in the market for a while. There's a significant difference between holding a securitized version of Bitcoin and the actual Bitcoin itself. These families, companies, institutions, and banks hold physical Bitcoin, but they also diversify by holding ETFs. According to a recent regulatory filing, the Rothschild family owns $4.2 million worth of shares in BlackRock's iShares Bitcoin Trust, IBIT, and $82.2 million worth of shares in the Grayscale Bitcoin Trust, GBTC. Edmond de Rothschild, Swiss, is part of the Edmond de Rothschild Group, which manages roughly $174 billion in assets. The news article I found spends a lot of time talking about how wealthy they are, which isn't surprising. I only found this news on a few websites. I thought it would be more popular, but apparently not. Here's the form for the SEC filing. It's complex and filled with so much information, but this is the link everyone is referring to for this data. I thought it would be bigger news, but maybe people don't know who the Rothschilds are. Many people outside of finance don't recognize names like KPMG or Fidelity. I was surprised by how few people knew about BlackRock until a few years ago. So, maybe the Rothschild name doesn't resonate with everyone. For those who don't know, the Rothschilds are rumored to be the richest family on the planet, supposedly possessing trillions of dollars collectively. It should have been obvious that they own some Bitcoin. I'm sure they hold physical Bitcoin on the blockchain as well as ETFs. So that's the news, the Rothschilds own Bitcoin through ETFs. Moving along, in other supposedly big news, someone discovered a $1.75 trillion Shiba Inu purchase on Robinhood. I believe it was, on Robinhood. This also made popular news. Shiba Inu hasn't been in the news as much lately. Years ago, Shiba Inu and Terra Luna Classic used to dominate cryptocurrency news together. Recently, most Shiba Inu news has been about people burning their Shiba Inu coins to reduce the coin supply. This purchase likely relates to that effort. A massive 1.75 trillion Shiba Inu coins were purchased and then transferred from Robinhood. No one knows where these coins went or what they're being used for. It involved 2 transactions of 875 billion Shiba Inu coins each. The ongoing goal seems to be to burn as many coins as possible, with the hope of driving the price up to 1-cent coins are also burned during transactions. So if the market picks up, we might see even more coins being burned. Interestingly, this news seems to have garnered more attention than the Rothschild news, showing where market interest lies. So, a huge 1.75 trillion Shiba Inu coins were purchased on Robinhood and then removed from the platform. What a time to be in the crypto world. Moving on. In other news, Bancolombia Group, one of the leading banks in Latin America and the biggest bank in Colombia, is entering the crypto business with the launch of Winia, a cryptocurrency exchange. A few years ago, many countries claimed to dislike the cryptocurrency space. In hindsight, it seems clear that they were planning their own crypto ventures. Back in 2020, various countries, from Colombia to the Philippines to South Africa, were reported to be considering their own cryptocurrency exchanges. The idea was that exchanges like Binance and Coinbase were making too much money, and countries wanted to find a way to keep that revenue within their borders. Using these local crypto exchanges, thereby directing the revenue from fees and transactions into the country's coffers. If exchanges like Binance and Coinbase are making billions from user fees, countries reasoned that they could capture this revenue themselves by encouraging local use of their own platforms. However, most of these country-launched exchanges failed because people didn't use them. This leads to the recent surge in regulatory enforcement worldwide. Countries aren't banning Bitcoin. Instead, they're tightening control because they realize that crypto is here to stay and can be highly profitable. The problem is that as people shift from using local currencies to cryptocurrencies, countries lose out on significant revenue. Even if they tax crypto exchanges, the revenue is much lower compared to what they could earn from their own platforms. Bancolombia's new exchange, Winia, aims to challenge the dominance of Bitso and Binance in Colombia by offering a Colombian peso-pegged stablecoin. Years ago, many countries discussed launching their own central bank digital currencies, CBDCs, but those plans seem to have faded. Instead, there's been a move towards creating stablecoins. Major banks like JP Morgan and Bank of America tried to launch their own stablecoins, but these efforts often failed due to competition and lack of interoperability. JP Morgan, for instance, created its own stablecoin and wanted other banks to use it. But this didn't work because banks don't want to use a competitor's coin. Eventually, it was reported that many of these bank stablecoins were built on Ethereum, which boosted Ethereum's network usage and price. Despite these efforts, the most popular stablecoins remain those pegged to the US dollar, like Tether, USDT, and USD Coin, USDC. The Colombian peso-pegged stablecoin might struggle to gain traction due to Colombia's relatively smaller economic influence compared to the US or Europe. Countries have been paying attention to crypto for a long time, and their recent regulatory actions reflect their interest in capturing some of the market. However, the Colombian peso-pegged stablecoin is unlikely to achieve the same level of success as dollar-pegged stablecoins due to liquidity and trust issues. In summary, while Bancolombia's Winia might face challenges, the broader trend highlights countries' ongoing struggle to adapt to and capitalize on the growing crypto market. This is why we've seen significant regulatory backlash aimed primarily at major exchanges like Binance and Coinbase, which dominate the space. If countries had regulated and embraced crypto exchanges earlier, they might have captured a larger share of the market instead of playing catch-up now. For those who might not remember, this is why South Korea has a kimchi premium on Bitcoin. In 2018, the country mandated that crypto trading must occur on local exchanges. As a result, these exchanges struggle to acquire Bitcoin, driving up its price significantly compared to international markets. This premium arises because South Koreans can only trade crypto through these government-approved